the dollar is stronger versus all the major currency pairs, and there was one currency pair that it wasn't stronger at the start of the U.S. session. That was the Aussie versus U.S. dollar. The reason was that CPI data in Australia came in a little bit stronger than expected, pushing the year-on-year level to 3%, which is the higher end of the Reserve Bank of Australia range for inflation. That helped to lead to a rise in the Aussie versus US dollar in the Asian Pacific session. But since then, we've seen a rotation to the downside. I'll talk about that rotation and the technicals that go into the price action in this currency pair in this video. So let's get started. Looking at the Aussie versus US dollar on the hourly chart, you can see the rise in the Asian Pacific session that took the price higher after that CPI data. The price high ended up peaking within this yellow area. This yellow area was defined by different swing highs going back in time. The first one back here in the second half of July, and then we had it took all the way till September to get back into that area right here to find the upper range of that. We broke above that level and came back in the middle of that range through here, finding support buyers. Admittedly, the price did trade above and below the levels through here, but in trading here today, we've worked up back toward that level after that CPI data took the price into that yellow area, but short of the 200-hour moving average. That's the green line in this chart, and the price started its rotation to the downside, pulled that way by the overall dollar bullishness that was seen in all the other major currency pairs today. In the New York session, we have seen the price extend below the 100-hour moving average and then extend below the closing levels from yesterday's trade, and also the 38.2% retracement of the move up from the August low right here to the September high right here. That level came in at 0.659448. There's also a swing area down here between 0.6588 and 0.6598. So lots of reasons for the buyers to come in between this 0.65889 level and 0.6600 level where the 100-hour moving averages sits. But as you can see, the price did move below that level, but has since rebounded back into this area. So what does it say going forward? Well, if the sellers are to remain more in control, they need to stay at least below the 100-hour moving average. That level again comes in 0.6600. Stay below that level, and the downside can be further explored with different lows coming in play, but we'll be looking more toward this target on the downside, which was home to, again, swing highs through here that formed a ceiling in the month of August. We broke above that ceiling in the beginning of September and raced to the upside. So coming back down to this area, which also includes the 50% retracement level, would be the next key target on the downside if the sellers can stay in control. So that's my look at the Aussie versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.